Hello everyone, welcome to Elliottwave-forecast.com YouTube channel. Today is March the 3rd and the chart of the day for today is gold. So here we have gold turning higher. Now if you take a look at the pullback structure here, this was the 29.55, I believe was the all-time high in the gold. If you look at the structure there, you can see the structure does not look impulsive. It was in a what we call a double zigzag or double three without extension. And what I mean extension is 161.8% extension, which is typically a characteristic of wave 3. Now here we turn higher from between 100%, 161.8% of this connector here in the WXY. That suggests that the market still remains bullish. Eventually it will break above this peak again, even though in the shorter cycle we cannot completely rule out the possibility we might become a bigger double correction. Right now, again, for this to really be confirmed, we need to break above this, but still though, the structure of this pullback is corrective, which is basically giving us a clue the market still remains bullish overall, and that's going to be the right side. Now again, the trick and the idea here is that if you go with the right side of the market and you basically trade in the direction of that right side, and by buying the dips in this case at the extreme area all the time, which is in this case the blue box, then basically if you did buy it back then based on the reaction higher, you would have already been risk-free. What I mean by that is you would have been able to take partial profit because of the reaction. You would have been able to move your stop loss either to your entry level or to your last low, and therefore your position is completely without any risk anymore right now, even if it ends up dropping again. I think the risk is for someone that does not understand the extreme area, and the risk is for someone that follows the chart every single swing and thinking that, okay, I didn't buy it back then because I was afraid, now let me buy now. That's the risk, right? That's for those people that did not trade properly at the extreme area. They will have risk higher than usual because they are not really trading at the extreme area, and because we have reacted higher from the extreme area, now the chances are we could either really go higher like what we are forecasting, or we can do a bigger double correction again and another leg lower coming to the next 100% extension again, which will become another support zone again because the market still remains bullish. And why is the market remain bullish? Because the structure here is corrective. So even if we do get a bigger pullback, it will still be a bullish market overall. Right, so for now, this is sort of the more aggressive count, or the more aggressive view, calling this correction completed 28.32, which needs to be confirmed by breaking above 29.56. If I zoom out, if you look at the daily time frame, it really does look incomplete. If you look at the latest rally from this low from last year, that looks to me like an extended rally here. So we could either be, now there are two options here, guys. This is basically what we are calling in the 1 hour time frame. So we're calling actually a very aggressive view in which this is some sort of a nest, a 1-2-1-2, right? Now another option will of course be just a simple 5 ways up instead of 1-2-1-2, right? So in a 5 ways up, basically what that means is that you're gonna have only one more leg up to finish a 5 ways up from here before you get yet another bigger pullback again in 3 ways, right? Either way, in the structure from here, whether you want to call it 1-2-1-2, whether you want to call it 1-2-3-4, it does not matter. It looks incomplete, right? It looks incomplete, and therefore, and then the structure of the pullback also is corrective. So therefore, we continue to favor the upside, of course. And for now, we're calling this completed from the extreme area, and then now let's see if we can continue to go higher and break above that previous peak. Now the rally from here, it does kind of look like a 5, so that will adds to the conviction, or adds to the view that I think we can continue to see more upside as long as we don't break below 28.32 again. Alright, so that's the idea here. As always, if you want to get more updates, feel free to check our service. We have 14 days trial, and the link is in the description of the video. See you all again next time, and have a nice day, everyone.